Welcome to TheoTrade. This is Don Kaufman. Here we are. It's December 6, 2017. Doing the Wednesday night video here. Let's get started this evening with a quick kind of reference to expected move. Now, many of you guys that tune in kind of day in and day out, or maybe you just tune into the weekend videos, know that I will look at what's termed expected move. I'll give you a quick example here. Last week, our expected move was plus or minus approximately $21. That means throughout the course of the week, the options market is depicting risk to move the markets up 21, ultimately or down 21. Now, that differs, again, that was last week, that differs vastly from what we saw this week. This week, we're still sitting, okay, on a $35 move higher or lower. Again, last Friday, some fairly wild volatility. Nevertheless, okay, there's the closing bell. Nevertheless, we're still seeing, all right, increased volatility throughout the marketplace. Again, zooming a little tightly into this, we've already had this week over a $35 move from high to low inside of the S&Ps. The reason I like to give a little bit of an orientation of kind of where you are on the week over here is, hey, make no two ways about it. We could expect still on Thursday or Friday some fairly serious moves to still take place in the market. Now, that's just giving you a quick update in terms of the S&Ps. What I also want to display to you here is what the Nasdaq happens to be doing. So if we take a look at the QQQ, the Qs on Monday ultimately broke down, tried to rally on Tuesday, rallied slightly in today's trading session. Nevertheless, we're towards the lower band here of the expected move. Specifically, the expected move in the QQQ is down around 151.50. Last but definitely not least, we'll take a look at the IWM, which is the Russell. The Russell really happens to be Mr. Toad's wild ride. If you haven't seen this yet, we've already hit the upper expected move and have cracked through the lower band of expected move in terms of the Russell, which once again breaks to the downside today. There's a few things that really kind of leave us on edge inside of not just today's market, but really for the remainder of this week. And some of that happens to be, number one, we're still seeing some fairly wild rotations in and out of different sectors. And I'll give you a quick example of that. Today, we see what we term the monsters of tech. Now, for those of you that are not necessarily up to speed on some of the TheoTrade lingo, what the monsters of tech happens to be, it's a conglomerate symbol that we made between Facebook and Apple, okay, Amazon, Microsoft. I mean, it really is the monsters of tech. The monsters of tech today are up over 1%. But I want to show you something again that's pretty interesting, at least to me. It's got the monsters of tech up 1%, but the Nasdaq itself only up ultimately 0.3%. There's not only sector rotation, okay, but now we're actually seeing persistent sell side activity throughout many Nasdaq stocks, okay. The only reason the Nasdaq futures are even up 20 here ultimately at the close, okay, is simply because a handful, and I do mean a handful of these monsters of tech are to the upside, including Microsoft, which got a slight bit of about 1.5%, okay? You've got Google to the upside, Amazon over here, and Facebook had a fairly explosive day. Apple actually closed down almost 0.4%. Nevertheless, also important to point out, Apple today, people, there's no news. This thing had a wild ride, touched down all the way to 166. That was a 3% move down at the cash open, only to see us ultimately rebound from there. So if you're thinking for any second that volatility has abated, I will counter that. I can see that the S&Ps, the S&Ps, if you just turned on the screen at the end of the day, you're like, they're massively unchanged. Nothing has ultimately occurred. Yet, again, we're seeing kind of a little bit of defection amongst the ranks over here, I also want you to take a look at something, well, like the Nasdaq 100. This is the Nasdaq 100 advanced decline line. You can see we closed pretty much 50-50. Again, the only reason that the Nasdaq closed up 20, plus points is that a handful of the big market cap techs were weighting us to the upside. So ultimately, once again, we're left in the hands when it comes to the Nasdaq. We're left in the hands of literally 3, 4, maybe 5 stocks at most over there. Doesn't exactly give you a warm, fuzzy feeling, when you want to sleep. Now, let's go over to the financials for just a moment. The financials have also been just an absolute stellar and kind of breakout upside sector, yet have halted in some of the recent trading sessions. Halted, again, some of that upside momentum. With the financials over here, okay, recognize that there's still, okay, a rather serious and increased implied volatility for the remainder of the week. And this is why, if you're looking for an answer as to, well, what's going to happen next? And I think a lot of people do tune in for just that reason. What's going to happen next is, I'm telling you, there is no clarity right now. There's a lot of times you can get a pretty good feel for markets. You can see different aspects. You can get a read on risk. Right now, all we can see in terms of risk, it's elevated out there. And it's specifically elevated inside of the financials. And you have to remind yourself that the financials have had this explosive upside move. Most of the times up moves, okay, take volatility down. So as markets move up, volatility kind of, abates a little bit. Here, we're seeing quite the opposite. You have to recognize the financials with, 2 days kind of remaining over here and 2 days remaining to the expiration. They still have 41 cents of expected move kind of packed into them, which is, again, ultimately portends a temperamental marketplace, because you realize a 30 or 40 cent move here in the financials is really going to swing these S&P futures around a tremendous amount. Not to mention continued weakness, of course, inside of the Russell. Now, from where I stand, again, I still see the volatility picking up in markets. I mean, that's about the best you're going to get, in a marketplace that doesn't have, again, any flashing warning signs other than when I say volatility is going to pick up substantially. You should anticipate some wild down moves followed, okay, by violent buybacks in there. The only question at this point, I think, are traders going to sell into some of the up moves? And that's the question that really kind of, begs the answer. And I think we're probably unlikely to find out here inside of the next 2 trading sessions. Now, switching gears a little bit, we're going to cruise over to Walmart. Placed a bearish trade inside of Walmart today, and I'm going to discuss in a little bit of detail here what that trade happens to be. Okay, ultimately we did a 98, and I'm going to delete this out over here. Did a 98. Okay, 96 put spread for right around $1. This is a bearish put spread. Why a bearish put spread? First and foremost, there is a dividend that is payable. Okay, the ex-dividend date ultimately comes tomorrow. That is not going to negatively impact the put spread. Like, there's no assignment risk because of the dividend. One of the reasons I wanted to mention it. Okay, the puts do not take dividend risk. Now, ultimately, the dividend is already priced into the trade. Okay, I know you see Walmart trading at 97.28, but the options are already pricing the 51 cent dividend in. Again, it goes ex-dividend on December 7th, Pearl Harbor Day. So the options are pricing that in. Now, okay, this is a 98-96 put spread for the January 5th expiration. Why do it? Okay, well, first of all, if you take a look at Walmart on a percentage basis, it's up close to 42% year to date, neither here nor there. The contrarian trade, the reason I'm actually taking a bearish position inside of Walmart has not participated in literally any upside potential since its earnings. Now, this thing has announced stock buybacks. It had good earnings, but it hasn't progressed any further to the upside. Consequently, if you take a look at XRT happens to be the retail sector. Of course, Walmart is part of that. The XRT has had one of the most explosive upside moves that we've seen in any sector. Okay, this thing is looking and staring down the face. That's a 12% up move in the last couple of weeks. Following this wild up move inside of retail, expectation for me is that this is going to come in just a little bit. Okay, now rather than take the position in the XRT, okay, the certainty of the XRT I think is less likely out there, meaning that sure, I kind of think retail can come in, but Walmart has been weak relative to the XRT. So in effect, taking the bearish position inside of Walmart, okay, at this point in time seems like the most effective stance to play. Hence why, of course, we placed that bearish position inside of Walmart. I want to thank everybody for tuning in on a day-to-day basis here, TheoTrade. Thanks, everybody. Have a wonderful evening. Bye-bye.